Good day, traders. Then welcome to the daily market rundown. Let's get started and talk a little bit about some of the overnight moves. Not a great deal happening. Of course, we do have quite a bit of news headline risk over the course of today, but looking across the board, what we do see in Europe is just another record high day today in the European equity indices. So it's very much this continued theme of European outperformance. Now, let's turn our attention and move across to the first topic of today, and that is, of course, all about Donald Trump and ultimately, what he believes the tariff situation is going to be. Now, before we get to that, just very briefly, yesterday, of course, we did have the CPI data out. Very, very important data point for the Fed, of course. And to sort of summarize it, it just came in very, very hot. Now, again, yes, there was some seasonality as a result of course, the start of the year. Everyone just sort of does these one-off price increases. And I think that's the way the market took it. It took it as very much just a seasonal bump where effectively the market is thinking, or at least the general consensus thinking, is that this is not going to be an ongoing month-over-month increase of 0.4 every single month. So very much the market took it in its stride and very much just sees this as a January bump rather than something that's going to be increasing inflation. However, again, it was very, very interesting to see particularly that core number tick up to 3.3. That is very much going to confirm the Fed is on pause for at least another couple of months, because they are going to want to see more data in order to have more confidence that we are resuming the trend towards 2%. Now, today, and the key takeaway for today and everything today is about ultimately what Trump says on this idea of reciprocal tariffs. And I think this is a fantastical article that's come from Zero Hedge, great publication. They do, of course, have got some really interesting reads. And I think they've done a great job on trying to sort of summarize the implications of today's announcement. I'm going to take you through that and give you an idea of what I think the key trades are and what the key opportunities are. And we'll talk a little bit about what the markets to trade are on that. Now, the key takeaway is ultimately what gets defined as a reciprocal tariff and how does the US go about reciprocating tariffs. Now, if you look at when this first came out last week, ultimately, if you remember Sunday, we gapped down and we rallied straight off the open and ultimately had a very good up day on Monday. Now, the reason is that reciprocal tariffs are being taken as this idea of, well, if one country tariffs us 5%, we're ultimately going to tariff them 5%. Now, why is the market taking this positive? Well, because if you remember in Trump's sort of pre-election, stage, when he was on the stage telling us about what he's going to do in terms of tariffs, he threw this idea out of a blanket tariff. In other words, he's just going to put a blanket tariff on everyone from 10 to 20%. Okay, in other words, ultimately everyone would suffer the exact same tariff regardless of what their trade policy was with the US. Now, all of a sudden, we're talking about a reciprocal trade tariff. In other words, if you charge us 5%, we charge you 5%. Why is that positive? Well, because it's not 10 to 20% blanket, it's country by country. Okay, and that's why the market's ultimately seeing the reciprocal trade tariffs as somewhat positive. Now, the key takeaway to today is going to be all about the devil is in the detail, because some countries, of course, will be impacted more and some less. Now, some of the things to watch out for in particular today, and I'm going to go through it in terms of what's the best case scenario, what's the most positive for the markets, and what's perhaps the least positive for the markets. Well, the most positive for the markets is Trump comes out and says we are just going to reciprocate with ultimately countries, and if they charge us, we charge them. If that's ultimately the outcome today, the markets will rally on that. They will see that as very, very positive, because it's not going to be altogether very inflationary. It's just going to bring US trade tariffs in line with what other countries are charging the US. Now, the other thing to take away from it, and again, I think this is the key reason why the markets will see it as positive, is that we can already see in Europe, for example, they are already now reviewing their auto trade tariffs because they want to ultimately avoid having reciprocal trade tariffs put on. So in other words, what it should do and what it could do is reciprocal trade tariffs could drive down tariffs across the globe. And that's why the market is seeing this as positive. If everyone lowers their tariffs ultimately, that's more globalization and not deglobalization as it's been feared to be. Okay, so I think this is the real spin on it, is this could become the narrative now that these reciprocal trade tariffs are actually a real positive, because it means means everyone's just going to lower their tariffs at the end of the day. Okay, so I think that's one key thing. That's the most positive outcome today, and it's the thing that I think really does get the equities rallying into record high territory. Of course, the markets are just waiting for this risk to clear, and this is a key thing to stress. If you look what we've done over the last 4 or 5 weeks in equities, we've absolutely flatlined. We've done absolutely nothing. Okay, don't forget the whole of Wall Street is thinking we're going to be up 10% this year, and currently we're mostly flat this year. Okay, so from a risk reward perspective, as soon as this risk around tariffs clears and everyone kind of understands what Trump wants to do with them, the reality is we'll then start to see money put back to work, and that's the thing that could ignite us into that record high territory, starting of course today. Now, in terms of what comes a little bit, another thing to listen out for very, very closely is when it does get announced, listen for, of course, around exemptions. Okay, there is this thinking that the US will exempt, of course, auto and pharma. And again, what this means, when the US does certain exemptions, what they're leaning on this idea is that we're not going to put tariffs on products that are going to hurt our economy. Okay, Trump doesn't want to hurt the US economy. He wants to make the US economy great again. So it's very likely he's going to put some form of exemption on, and that is only a positive situation. It's less aggressive than what the market is anticipating. And then, of course, listen very closely about China, and China in particular, because it is, of course, the US's biggest trade partner alongside Europe. So listen very closely. Does it stop at 10%? Is this it? This is as bad as it's going to get? Because don't forget, pre-election, Trump was talking about 60% tariffs on China. So again, it'll be another positive where, well, this is as bad as it's going to get with China, and rather than argue and put on lots of tariffs, we're just going to take a step back and do more agreements. Okay. And then finally, one of the other ones to pay attention to, which could be taken a little bit more negatively and will in particular impact Europe quite a lot, is the type of reciprocal tariffs that they put on. Do they put it on goods, in other words, blanket across all goods using the average tariff rate of each country, or do they do it on a product by product level? And then very importantly, do they put it on the VAT price goods? In other words, do they take the value of the goods after VAT has been assigned? Now, why does that matter? Well, because some countries charge much higher VAT levels than others. For example, the likes of Europe. Okay, Europe's got a very high VAT rate, so if they're going to put reciprocal tariffs on VAT goods, that is going to impact Europe a lot more than what it would other countries. Okay, but again, if that isn't the case, if it is just a straightforward reciprocal tariff, the market is going to look through it. It's going to see it as a significant positive. Now, I did talk a little bit in yesterday's market rundown about how euro is up on the year, Mexican peso marginally down, Canadian dollar flat on the year. The point is that the markets are not pricing in a risk of these tariffs. If anything, they're seeing the tariffs as relatively positive. Why? Well, because they're a lot more toned down relative to what we heard during Trump's pre-election. Okay? Now, let's turn our attention to talk some about the charts. I think there's a couple of markers to pay attention to. I think gold's an interesting one. Why? Well, because it's very overbought. So we know when it's overbought that the positioning is skewed to the upside. We can see that gold got bought very aggressively off of that inflation print yesterday. Of course, it makes absolute sense they bought it. However, and I think it was Jason Shapiro or someone put out a tweet this morning talking about, is this sort of high inflation print good or bad for gold? Well, the short answer is it could be both. Okay, high inflation is never good for gold, but if real yields are moving higher, that will be bad for gold. Okay, in other words, if we start to see bonds offer, ultimately gold is going to be pulled down with that. Why? Because it acts as de facto tightening. Okay, so keep a close eye on that. I think gold is one that very possibly on the announcement today, reciprocal tariffs, the algorithms hit it, it spikes up, starts to offer, and then pukes back down the page. Why? Well, because like I said, reciprocal tariffs are not going to be inflationary or not as inflationary as everyone's fearing. Okay, so gold may initially bid up on it, but I think then it gets sold very aggressively. Watch out for that one. It's one that will clear out quite a number of positions. And like I said, there is no real support until yesterday's lows around that 28.80. So a good $60 to $70 a downside opportunity in gold. If we then turn our attention to the S&P, I think that's a key one. Like I said, you can see that every single dip is bought up. It very much is a market that everyone just wants to be long of. The whole street wants to be long of it. If the tariff risk clears today, guess what? Kumbaya, we're going to the upside. We're not only going to test that yearly high, I suspect we do extend upon it. But like I said, everything is about the details now. We can see every single day that VIX gets squashed. So again, keep an eye on that VIX. We get below 16s today. It does give the all clear for the markets to stage that rally and finally break out to new record territory. Okay, of course, yesterday's low, very interesting. We shouldn't be getting below that. So that is a key sort of risk point. If we do take out those lows, yes, equities will be in a bit of trouble. VIX will take out that 18 level, which is massively important. And that then does create a different problem. But the thesis right now is these reciprocal tariffs are not a concern for the market. So we get that risk clearing today and we should be clear to the upside. Okay, and then finally, Euro, another one I think is a good catalyst for a little bit of an upside rally. Why? Well, because if you remember from a couple of weeks ago, we were talking about this in the daily market rundown. This 104.90s was a really good area. We can see how it got defended a number of times. A little bit of stops above there, and then they reclaimed that resistance. Okay, the price action was very clear up there. You can see the market just does not want to settle above there. We get above today's highs, you're going to get a number of shorts that are hedged against these tariffs that are going to come unstuck. Not only are we going to take out the 89s, we're also going to take out the 105.50, and we should then make our way back up towards that 106.70 resistance. Okay, so Euro is another very good candidate for an upside rally, should ultimately the tariffs prove to be not as concerning as expected. Okay, that's then a wrap. Look, I think there's a lot of things to think about over the course of today's session. It very much does look like the reciprocal tariffs are going to be taken as positive. Now, what that means is you've got to pay attention to that very important pattern play. We call it the scene of the crime, or the retest of the scene of the crime. I will go through that with the Tradelo traders in the Discord channel. Just make sure you're aware of it, because that's the kind of play, the pattern play we're going to look for on the floor today. If there are any other questions, do post them in the Discord channel. Of course, a headline risk is ultimately what everyone is aware of, so you don't really want to be sitting in positions this afternoon until that headline risk clears. And then, like I said, so long as the reciprocal tariffs are not as bad as expected, it very much does seem like the theme is a nice risk on session. That's it for today. Good luck out there, manage that risk, go make some money.